Good morning, everybody, and happy Friday. Welcome back to Beat the Bell, presented by Kane Capital. Hope you guys have all had an amazing trading week thus far. Today's episode is, of course, a special one because we got a live NFP reaction. Mander's going to do that for us in just a bit. But first, to kind of recap what we've seen over the past couple days, the market's rallying, and we see that continued strength. Last Friday, we got a breakout. This week, we back tested it, held beautifully in ES, and the Bulls continue to remain in control at the moment. S&P futures are up 22 points, about 0.5%. This Thursday, Friday, Green Day rally theme continues, and we're going to be watching closely today to see if we get follow through from yesterday's giant Green Day. All right. Money Mander, good morning.
Good morning. You got it. We'll take it away in a second here on Fed forecast, but we got NFP live reaction, and I actually have some data on why we've seen these crazy Thursday, Friday squeezes the past couple weeks.
Awesome. Ramsay Rippers, good morning.
Good morning. Ready to wrap up this week in a good way. Let's get to it.
All right. Awesome. Money Mander, take it away. Fed forecast,
right.
economic calendar.
Let's get right into it. No economic calendar, obviously, at the end of the week here, but live NFP. So NFP just came in with a 78% beat of unexpected. We actually added in non-farm payrolls 339,000 jobs last month versus 250, which was hot the month before, and well above the $193,000 estimate. So really coming right off the back of ADP employment just a few days ago, the labor market is as hot as the stock market right now. Really insane amount of demand for labor right now. And so even with unemployment upticking a little bit at 3.7%, I think this just goes to show how many jobs are available. So even with unemployment rate upticking, we still had non-farm payrolls come with a 78% beat. And so I think it'll be interesting to see how the bond market and the stock market reacts to this today. Right now, as of yesterday, we had a full 180 in the Fed countdown leading into the June meeting. So we talked about it last week, I believe. There was originally like a 97% chance of a pause. Then it flipped a full 180. It went 30-70 in favor of a pause. And then just yesterday, full 180 back again to 70% chance of a pause with a 30% chance of a hike. I think this will be really interesting to see how the bond market reacts to this today, right on the back of the Senate passing the debt ceiling. A lot of turmoil going on here today. So I think it'll be a really, really interesting day to trade. But going into today, at least in the pre-market, still a 70% chance of a pause. I think this data will definitely be really important right on the back of Jerome Powell here, because really the labor market is what they have to try and cool inflation. As long as the labor market stays as resilient as it is, people are going to stay employed. They're going to continue to spend because they're making money to spend. And it's going to keep that inflation really sticky at like the 5% range we've been at. So I think, Jerome Powell's in a tough spot here. I think as far as his diction has made it, a pause or a hike would probably be warranted at the next meeting, because they're saying the financial system is resilient enough to deal with one. And we still have data coming in extremely hot, really across the board here. So that's NFP live. Let's see what the markets do with it today. We'll see if the bond market kind of reprices that chance of a hike at the next meeting. And if so, we'll see how stocks react to that with the correlation to yields. And the last thing I wanted to cover here today was looking back on May, right? We're turning into the new month in June. Let's take a look back at May and what this meant for SPX versus the other indices. If we turn back, as we turn the clocks into the summer here, last month really felt like a 2021 type of squeeze. At least for a lot of the names that we look at in the megas, it felt like it was 2021 all over again. You had high betas ripping. You had obviously the mega 10 squeezing like crazy. But the S&P 500 closed up just 1.3% last month, with the Russell 2000 closing the month green by just 0.5%. And the NASDAQ was up a staggering 9.2% on the month. And so going back to Wednesday's segment, like I was saying, keep your eyes on the outperformance, I think, this summer moving forward for the Russell 2000 versus the big tech in the NASDAQ. But here was the real kicker to me. The largest 10 stocks in the S&P 500 closed the month up 8.9% on average. The remaining 490 averaged negative 4.3% in May. So it really shows, since going back to the Silicon Valley, the Signature and the First Republic Bank seizures there, the trade across Wall Street has been long AI, long mega tech. and short everything else. And yet, because of the market cap weighting of these massive tech stocks, of the semiconductors that, NVIDIA just crossed $1 trillion valuation, because of the market cap weighting of those, it actually dragged the S&P 500 to a green month, with really for the 490 smaller ones averaging negative returns on the month. And so really looking through some of the sectors that would usually be your safe havens during these rate hike cycles, financials closed the month down 3.5%, industrials down 2%, consumer staples down 6%, and energy fell out the whole month, closing May down 8.9% after their insane outperformance last year. So seeing a lot of reallocation going from the energy names and those safe havens last year right into tech. And then I think what we start to see here, at least what we did see at the start of the month as the June money flowed in, was now take some of that profits rotating out of the outperforming big tech and probably go into some of these high betas in the Russell 2000. Let's cover the last thing that I wanted to show. Looking at Friday call flows, this goes right into what Honda was said before I passed it back. The Friday call flow since really the start of April is what's really been leading this rally, and what made, I think, this whole past month feel like 2021. Every Friday since has seen these major surges in call flow that you can see here. This is call flow of the Mega 7, the AMD, Google, Amazon, Apple, NVIDIA, Tesla. You can see every single Friday since the start of April, we have massive, massive call flows coming in that really have felt like an end of week rally for the vast part of 2 months now. We see Thursday, Friday squeezing into the end of the week. And we'll see if that keeps up. I think I've been playing that long really every Friday since. And so until that proves otherwise, I think we can expect a solid green day here, and we continue to go with that theme. But I'll pass it back to you, Alejandro.
And we've been taking advantage of it. Let's dive straight into it. So I'll talk about the trade that I took yesterday. It's a new segment we're going to be doing, sponsored by Rocket Scooter. As you guys know, we use Rocket Scooter in our trading every single day. Really love those guys. And me personally, it has really enhanced my trading. So I'm going to show you guys an example of how I used it yesterday and why I got long. So here's just the ES chart. Yesterday, I got long at 41.91. The first important thing to note here, guys, as you see, I have my 41.87 level drawn out and then 41.75 just below that. 41.75 had been previously tested, okay? But that area was the breakout from last Friday. So when you get a breakout, what you want to see is a back test of the breakout, turning that previous resistance level into support in order to get that continuation, because unless you get that, you do not know if it is a true breakout or if it is a false breakout. So that back test of 41.75 that we had gotten previously in this hold here of 41.75 confirms that breakout. But in this particular trade, the reason I entered was because we cut below that 41.87 level, false breakdown there, trapping shorts. We reclaimed that level and I got long at 41.91. And as you guys can see there, I trimmed on the way out 42.03, 4,200 to 42.05 was first level. And then I trimmed more at second level, 42.11. Now let's go over to the Rocket Scooter chart. I can show you guys how it was able to help me out. So a couple important things to know. If you look in the top left, you'll see the resilience number. That's RES. Anytime that is positive, that's showing strength, okay, in the market. So anytime that that's greater than 0, that's going to be a bullish indicator. And then you have DD, which was 0.73. And anytime that's greater than 0.5, that's also a bullish indicator. Okay. So those two things, coupled with the fact that we were moving into the bull zone over hedge pressure, which was 418, that was massive added conviction to get long. Now, like anything else, nothing works perfectly in the market and nothing is perfectly fluid. So you have to give a little bit of room. So I added at 41.91. We dipped about 5 points, but eventually climbed back over that hedge pressure back into the bull zone, which was starting at 418. And if you also notice, we bounced perfectly at the bear zone, which added even more conviction that bulls are really coming to play. And as we started to squeeze over that 418, you guys can see how we took off. So that's how I was able to implement Rocket Scooter. Ryan, if you want to go to the next chart. Now, taking a look at the system, the reason that this is so beautiful to me is because if you were looking at the system, we were still technically trading below the 50 SMA. So I was able to catch some extra points. Now, the system, of course, added conviction once we broke over the 50 SMA and we got the buy signal. That really let me know that, okay, this rally may have some serious juice to it. But I actually added this long below that 50 SMA, which in the past I would not have been able to do. I would not have had the conviction to do so. But having those levels drawn out and having Rocket Scooter to assist really helped me in this particular situation. As you guys can see there, I added while we were still trading below the 50 SMA on the SPX chart. If you want to go to the next chart now, Ryan. And lastly, this is how the trade has panned out so far. Excuse me, good for 60 points from 41.91 ads. I trimmed this morning at 42.51. We're currently trading at 42.51, and the high is 42.57. So I'm just in a 10% runner now, letting that baby do its job. It's working beautifully, and that is a great way to increase risk reward, is leaving those runners. Right, you can shoot for 1-to-1 risk reward. If you leave those runners, the reward shifts in your favor over time. So that's the long I took yesterday. Again, awesome trade there. A few different pieces to the puzzle. As always, the more levels of conviction you have, the likelier it is that the trade is going to pan out. Now, Mander's going to share something with you guys as well, how he's been using Rocket Scooter. You're muted there. I might be having technical difficulties. We'll come back to Mander.
Good to go.
Oh, there you go.
Thumbs up.
You're good. You're good.
Okay, great. This mic. Anyway, so this is what I've been using Rocket Scooter for. I think this is really the coolest thing because I don't trade 0 days as much as opposed to the guys trading futures. But for me, swing trading, Rocket Scooter actually offers monthly maps. And so what this does is take where the bullish and bearish zones are positioned, the same thing as it will do intraday for SPY, for QQQ, but it'll map them out for the next 4 weeks. And so you can see the first of those two, the light gray and the dark gray, was obviously this week expiries. Then you go out to the next week, which is the monthlies, the following, and then the 4th week out. And so what this shows to me, this is Tesla, which is a swing I took on the June monthlies. What this shows to me is you can see the bull zones at the top there continue to get lower and higher at the same time, which to me means positionally institutions are bullish on Tesla at a lower price and a higher price moving forward. Whether it goes down, whether it goes up, they're positionally set to be bullish and continue buying. And same thing with the bear zones. You can see it takes a lower and lower and lower price on Tesla for them to get bearish over the next coming weeks. And to me, that means full auto bid, right? Realistically, it looks like going into the June monthlies there next week, Tesla would have to be under 160 for them to be positionally bearish. And besides that, they're buying the dip all the way down to 160 and looking for higher. I mean, that bull zone 3 weeks out goes all the way to 400. They are very, very bullish positionally on Tesla moving forward. And so I looked at this in a company with a technical analysis. We had a daily bull flag breakout, kind of all the stars aligned here. And so I took a swing on the June monthlies that look like they're going to be set to open up over 100% here. Tesla's at 210 in the pre-market. So this to me is the coolest thing. You can see positionally, and it varies on every name. Not every name is set up like this, like everyone's bullish on everything at lower and higher prices moving forward. But this gives you an accompaniment to other things you're looking at. If you like a setup in a name, you go and look at this. Oh, well, all institutions are bullish, lower and higher on this thing, increasing bull zones for the next weeks moving forward. I love that. And we go into Amazon. It's a very similar setup. I haven't swung anything on Amazon, but you can see going into next week, massive drop off in that bear zone. It takes the price all the way down to 100 for institutions to be positionally bearish. And you have a bull zone down to 110 with increasing bull zones up over the next couple of weeks. So Amazon's another one I've been trading long for weeklies. I haven't taken any swings on it, but this is really how I love using the platform. You can see where people are positioned, where they're bullish to, where it takes for them to get bearish on. And really in this kind of rally market we've been seeing, I think that's a great thing to see what names they're very bullish on.
Yeah, awesome stuff there. I mean, my example was obviously a day trade. Your example, swing trading. Really important, I think, is just understanding how institutions are positioned, and you want to be swimming with the tide. You want to be swimming with the current, and that's basically all we're doing. And as you mentioned, we're still using, and as I showed in my example, I'm still using, my style of trading, and I'm still using the system, or I'm still using the info or the knowledge that I've built up to this point. But now adding Rocket Scooter to that has really helped, and I think we've seen that, and we've been making some really good trades. So it's exciting.
Very exciting. I think everyone understands at some level how options trading influences the stock market with positions, but now being able to see that on an easy use platform is so cool to me. I've never had anything like that.
Yeah, exactly. 110% agree. Okay, guys, let's go over to Ramsay Rippers now for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, boys. Good morning. Good morning, everyone. Ryan, do we have a stat update? Onto a game.
Sure.
All righty, let's get right into it. The indices are slightly up. SPY pulling back a little bit here off of that NFP high candle. Q's pulling back a little bit harder. Both slightly up. What do we got today? Green or red, guys? Hondo.
I think we're going to see a green day today. We talked earlier in the show, and Mander showed us those Friday call flows that we've been getting, and we've seen it, the Thursday, Friday rally. I think this is a bit of a sticky area for the S&P, so I'm not sure that we get the level of strength that we saw yesterday, but I am expecting us to finish the day green.
Mander.
Yeah, interesting one here. To Alejandro's point, we did just take out year-to-date highs in futures yet again, and Q's looking like they're going to do the same. So I'm going to stick green just by those call flows, but in the same boat, I don't think we see one of these massive rallies like we did last Friday.
Yeah. I believe I agree with both of you. So Apple getting really close to that all-time high, passing that all-time high level. We basically tested it in the pre-market today. If we want to technically consider all-time highs, including pre and post data back in January of 2022, 183.39 is that level. We'll stick to what they're showing on the daily chart. I believe it's 81, like 5, 81.6. You guys think we close over that all-time high today? Yes or no, Hondo?
Let me see what it's trading on the pre-market. 180.67. So I have been saying that we're targeting all-time highs. We're basically here. I've been noting the strength. Everybody's been noticing. I mean, it's been an obviously strong stock. As far as today, I'm going to go yes. I think based on same thesis of the Thursday, Friday rallies that we've been seeing, if we get that, it will be largely because Apple is leading the charge, I believe. So I think that, yes, that would mean that we see a breakout over all-time highs, a close over all-time highs. I don't know. We'll see. It's going to get fishy in this area. That's all I'm saying.
All right, Mander.
Definitely going to get fishy. I'll take the other side. I don't think we get it today. I think it probably leads the charge, but I don't think we see one of these massive rallies. I think that would be another, 1.5%, 2% up from even where it's going to open. But if my timing is correct, I believe Apple is coming out at a developer conference next week and releasing their own rival to the Meta Quest with their artificial reality AI. So if they come out with their goggles, they're going to be price pointed way higher at somewhere around $3,000. So they better be really sweet. I think if that's successful, they could probably take it out next week.
That is crazy. I think the Meta ones are $500 and the Apple ones are supposed to be $3,000.
In typical fashion, they think they got the best.
What the hell are they doing?
Yeah.
That's crazy.
All right, guys, that's going to do it. Quick one for us today. I'll pass it back to Hondo to wrap it up.
All right, awesome, guys. That's going to do it for this morning show. Hope you guys all had an awesome trading week, per usual. Appreciate you guys tuning in and joining us on this Friday morning. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com or scan the QR code in the top left to join us. We got a 7-day free trial going, so take advantage of that. Have an awesome weekend, everybody, and we'll see you back here on Monday morning at 8:30 a.m. Eastern. Have a good one, everybody.